Yo, what up, fam? It's your boy, Big Walt, pulling up on the block with a special public service announcement. Now, if you're getting crypto investment advice from Dr. Boyce Watkins, I would strongly encourage you to either take that with a grain of salt or ignore it altogether. Unfortunately, when it comes to educating and advising on cryptocurrency, Boyce Watkins is out of his depth. Now I know. Boyce Watkins has a PhD in finance. That's just kind of funny because it reminds me of Rudy Giuliani. You know how they used to clown Rudy, talking about every third word out of his mouth was 9/11? Like, that's what Boyce peeped his Rudy joint. Watch how they clown Rudy.
Rudy Giuliani, there's only three things he mentioned in a sentence, a noun and a verb and 9/11. I mean, there's nothing else.
Well, it seems like every 15 seconds, every 30 seconds on his videos, Boyce Watkins is reminding all of us that he's got a PhD in finance from Ohio State or wherever, and that he was a professor of finance at Syracuse University, I think. Yeah, so he's always talking about his credentials. I got a few sheepskins myself, though. United States patents, a whole bunch of other stuff. I'm a combination MBA computer scientist, and I've got 30 years experience as a practitioner in this space. I also studied blockchain and crypto economics at MIT. So I think when it comes to this topic, I got the ups on old Uncle Boyce. Anyway, I'm going to react to this video that shows Boyce Watkins trashing Coinbase, so you can see exactly what I'm talking about. So rock with me. Let's go ahead and play this video. As you can see, I guess this website is called the Black Stock Market Program or whatever. I guess this is for people who follow Boyce's investment advice. And the title of this video is Coinbase Users Are Getting Their Money Stolen and the Company Can't Help. So without further ado, let me go ahead and play this joint.
It has to do with an app called Coinbase. Now, how many of you are using the Coinbase app right now? Give me a yes or no if you're using Coinbase to hold your crypto or if you own Coinbase stock. Okay. Sharik, Clarice.
All right. I hate to pause it so quickly, but like off the rip, like dude's talking about Coinbase like it's an app. I mean, sure, Coinbase, the company, has an app that people can use to interact with it. As well as other modes of interaction. But calling Coinbase an app it's like calling the New York Stock Exchange an app. The New York Stock Exchange has an app in the App Store. So does the NASDAQ. But the New York Stock Exchange is not an app. And the NASDAQ is not an app. So like, just that's like a nitpick. But like that just goes to show how disconnected we are from what's what. If you're going to speak about something authoritatively, I think you need to speak about it, in the correct way. And just within the first 13 seconds, we're already starting off on the wrong track. Anyway, let's continue.
Lisa says yes. Joe says yes. Keon says yes. Okay, so a lot of you are using Coinbase, and let me tell you what's going on with Coinbase, and we're going to kind of break down what's going on in terms of assessing things. Coinbase is in the news right now because Coinbase has had a big problem with the users getting their accounts drained, like literally hackers breaking in and stealing all their money. And let me look this up because I want to.
All right, just a point of fact. This is not a big problem. Coinbase states that this has happened to less than 0.1% of its users. That's 1/100 of 1%. So we're talking 6,000 of their users, or less than 6,000 of their users, reported this problem. And they've got more than 60 million users. So let's just keep that in terms of perspective. All right, let's continue.
I'll make sure I issue a public service announcement to let you guys know that Coinbase is, it may be, I'll give you my assessment after I read it. Let me read this, and we're not going to, convict them right away, but I am really curious about some of what I saw. Let me see. I saw it on CNBC. Here we go. So here's the story. It says, CNBC interviewed Coinbase users across the country and found that thousands of customers had complained that basically there was a pattern of account takeovers where users see money suddenly vanish from their account, followed by poor customer service from the company. So with Coinbase, their big problem is not just that there are hackers that are breaking in and stealing everybody's money, but that their customer service team is apparently incompetent to handle the issue. This is a big problem. This is a
I had to stop it right there again. Again, this dude's talking about, hackers are breaking in and stealing people's money from Coinbase. And that's just not what's going on. Hackers are not breaking into Coinbase. Hackers are not stealing everybody's money. If you want to see what it looks like when hackers, steal everybody's money and break into something, look at the Polychain attack, where the dude stole, what was it, $600 million? That's indicative, of hackers, breaking into the exchange itself, which is what the exchange is responsible for. They're responsible for the exchange, right? That's not what's happening here, right? Because if that were to happen, then there'd be a lot more money affecting a lot more people, or a lot more money missing, rather, affecting a lot more people in terms of Coinbase's customers. If I understand correctly, Coinbase hasn't had, a breach yet. They haven't been hacked in terms of like theft. So that, basically that's just false. And again, it's just indicative that Boyce, he doesn't know what he's talking about. He'd know the difference between somebody, hacking, you as an individual versus somebody hacking, the exchange. But anyway, let's proceed.
Serious issue because I was under the impression that Coinbase knew what the hell they were doing. Coinbase is a multi-billion-dollar company. I don't even know what the market cap of Coinbase is. Let me see here. Coinbase's stock price, which is about $257 a share, and their market cap is $54 billion. So you would think a $54 billion company will be able to handle customer complaints. It also says Coinbase's customer service has been primarily via email, and many customers say it is hard to reach representatives and that they have not been made whole for their losses. So they can't get in touch with Coinbase. So you just lost all your crypto, all your money's gone. You don't know where it went. You reach out to customer service. You can't get a person on the phone, and they give you an email address. You email them, and apparently you're not hearing back from anybody. And then to make matters worse, they're saying a lot of customers did not get their money back.
All right. Again, I need to jump in here. He keeps talking about how big this problem is. Mind you, it affects less than 0.1%, less than 1/100% of Coinbase's customers. He's making this statement that Coinbase doesn't know what it's doing. It's a cryptocurrency exchange, and it's thus far not been hacked. So I would say, I would say that they do know what they're doing. If an individual has poor security practices, then that's their bad. That's not Coinbase's bad. Boyce, again, he doesn't know what a cryptocurrency exchange is, and he doesn't know what he's talking about. If I'm banking with, Nations Bank, or I don't even think Nations Bank exists anymore. If I'm banking with like Bank of America or something like that, and I walk out of the bank after making a withdrawal, and somebody like pickpockets me or something like that, it's not Bank of America's fault. It's my fault. You know what I mean? If I'm like waving around wads of cash, or if I am, at the ATM and I've got like this big card with my PIN number on it, and so everybody's standing behind me in line at the ATM can see my PIN number, and then somebody, you know, later on uses that PIN number to drain money out of my bank account. It's not Bank of America's fault. It's my fault because I don't have good personal security practices. So again, you know, Boyce don't know what he's talking about. Now, he's got a point here where, okay, they could probably improve, you know, customer support and customer responsiveness. Like that's always a good thing. You know, a lot of these internet companies, you know, they start out, you know, and you know, customer service is expensive. Like having a call center is expensive. And sometimes when these companies start out small, they don't invest their money, you know, the bulk of their budget, you know, in that. But now that, you know, Coinbase is all grown up, maybe they should. You know, one of the things that's for certain is when it comes to dealing with money, people generally like to speak with a human when it comes to dealing with their money. But again, you know, Boyce is showcasing his ignorance of cryptocurrency when he suggests that people with poor wallet, you know, security practices should be made whole. You know, the bank is not going to make you whole if you go out and do something silly in your account, you know, your bank account, right? Traditional bank account, you know, gets drained. That would be your fault. Now, if the bank did something on their end and it was the bank's fault, then yeah, you'd be made whole. And, you know, likewise here, if Coinbase did something on their end that caused people to lose money, then sure, you know, Coinbase should be, you know, accountable for that, and they should make the customer whole. But in this case, this isn't what's going on. The other thing too is that like crypto exchanges aren't FDIC insured. You know, they're not banks. You know, in terms of getting made whole, like, you know, even if it was, you know, Coinbase's fault, because they're not FDIC insured, you still might not be getting made whole. And from an investment perspective, you know, if Merrill Lynch, you know, said that you should invest in a certain thing, and then you end up losing all your money, you know, after the investment goes south, you know, you're not going to be made whole. That's because Merrill Lynch is not, you know, that part of the bank, the investment bank, is not FDIC insured, whereas the Bank of America, who, you know, who owns Merrill Lynch, the you know, the commercial bank side of Bank of America, yeah, sure, you know, that's where, you know, you have FDIC insurance for your depositors. But anyway, yeah, that might not be the best analogy, but again, it's speaking to Boyce's ignorance of what cryptocurrency exchanges are, and what their purpose is. So let's continue. I need you to do me a favor, fam. Please click that subscribe button and the like button. It might be a small thing to you, but to us it's huge. We're trying to hit this 1,000 subscriber milestone one subscriber at a time. So YouTube will recognize us and give us access to the tools that will allow us to bring you more and even better content. Thank you for your support, fam. We really appreciate you.
Let's see here. It says former employees say the company's customer service practices shifted over time, with representatives struggling to keep up with demand. So Coinbase has grown a lot. Coinbase has made a ton of money since they went public. Coinbase's valuation tends to go up with crypto. If you notice this month, there was a massive surge in the value of your crypto. If you own crypto, congratulations, because you probably made a killing. Every crypto I can think of, every crypto in my portfolio went up like between 70% and 100% this month. 130, 140%. Some of them did. And so when crypto goes up, Coinbase goes up. When crypto goes up, Robinhood goes up, because Robinhood and Coinbase trade.
All right, let me pause it right here. What Boyce is saying is true, right? You know, Coinbase's value does increase during crypto bull runs. You know, but why is that? Boyce doesn't explain it. You know, which is something that I would expect from somebody with a PhD in finance, right? You know, but the answer is twofold. I'll explain it, you know, for you, since Boyce doesn't, right? Coinbase, you know, as the nature of its business, they're going to keep a certain amount of cryptocurrency on its balance sheet. So of course, you know, as those assets, you know, increase in value during bullish periods, the value of Coinbase itself is going to increase. It makes sense. You know, say the same thing about Tesla. Tesla now has a bunch of Bitcoin on its balance sheet, and so as the crypto bull run happens, Tesla's value increases because of that asset, you know, appreciating in value. The second, part of this is that the average consumer is more confident during bull runs, and thus they're going to buy and trade more, right? So this is good for any exchange, right? Because it's a volume game. Any increase in volume yields more transaction fees. The exchange, from a standard operating practices perspective, they don't care if the market's going up or it's going down. They're handling the transaction. So when you buy, they get a transaction fee. When you sell, they get a transaction fee. So any increase in volume is going to increase the value of the exchange, because they're basically earning more revenue. That's pretty simple. But Boyce doesn't go into any of this. Like, it seems like he only has a surface level understanding of the mechanisms at play here. And he was just about to say something about Robinhood. Let's go back to that.
They transact primarily in crypto. Robinhood is pretty much a crypto app, and it's a gambling app. It's not so much an investing app, because people don't typically, the average account holder in Robinhood doesn't really hold the stocks that long. Their balances are not that big.
All right. I have to eat him up on this too, right? This thing about Robinhood is an elitist talking point. And I'm actually surprised that Boyce made this statement, because I thought his channel was all about representing marginalized people and things like that. But he's talking as though he's speaking for hedge funds, or he's speaking like hedge funds. In the grand scheme of things, all speculation is gambling. The people on Robinhood, and furthermore, the Wall Street Bets subreddit, which he doesn't mention, but that's where a lot of the action on Robinhood, emanates from. They're not doing anything much different than the sanctioned brokers and hedge fund managers are doing. If Boyce paid attention, he know that many of these folks are doing sound market research and applying sound trading strategy. So this is exactly how they were able to put hedge funds in the bear trap and run that short squeeze on them during that whole GameStop gate thing, right? But again, Boyce, he don't know what he's talking about, yo. And when he said something about Robinhood is, the people don't know what they're doing, like they don't hold on to to stocks and things like that, like bro, what are you talking about? You know what I'm saying? Like, first off, people who buy and hold, right? Like that's not sophisticated trading. That's like the simplest form of, investing in the stock market like you can do. Wall Street Bets, the whole bets thing, I mean, yeah, it'll lose to gambling. But you're betting that the stock is going to move, or the cryptocurrency is going to move in one direction or another. And then you place your bets. And this whole gambling terminology, I'm not using it to as a pejorative, right? I'm basically using it. I would use the same thing if we were talking about, a Goldman Sachs, trader. It is what it is. But to say that people don't hold on to the stock, I mean, that's dumb. Day traders don't hold positions for long. That's why they call it day trading. It's not a good or a bad thing. It is what it is. It's called day trading. Like, the true day trader ethos is to not hold any positions at the sound of the closing bell. It's to be out of all your positions. Does Boyce Watkins not know this? Does the dude with a PhD in finance not know what a day trader is and what day traders do? Like what's he even talking about, yo? I might have to start questioning his PhD in finance. And he might, I was going to joke. I was going to say, you might have to go ask for a refund on his PhD in finance, but that's not the real issue. The lead attorney in Pocket Watching with JT, they actually ran an episode, a video on Boyce. I got to shout them out. Shout out the lead attorney. Shout out to Pocket Watching with JT. I'm a fan. I catch y'all be dropping some jewels. So appreciate that. But one of the things they said when they called Boyce out a couple of months ago, for something, that he did that was, let's just call it untoward. One of the things that they said is, this dude is a theorist. He's not a practitioner. Like, this dude went from, being a student to being a professor. But he never put that PhD in finance to work in the real world. So, when it comes to actually making moves on Wall Street, when it comes to actually, day trading. And when it comes to, a lot of these things that he's talking about, he has no clue what he's talking about. Cause he's basically, just some ivory tower theorist, and making these comments about, Wall Street bets and trying to put down the people, who are using that, application to make trades. I mean, man, he's just proven, the lead attorney, in pocket watching with JT's point. Real talk. But anyway, let's continue.
And then also, what was the other thing about Robinhood that's really interesting? They actually showed in a study that 26% of the people in the stock market entered the market in 2020 for the first time, that their first time ever buying stock. You guys know we had our first share of stock program, which, by the way, you can take a look at that at firstshareofstock.com. And I know that with black folks, I was determined to teach black folks how to buy stock because I know this is the key to wealth. So we personally introduced over 1 million black people to their first share of stock. We keep track of how many people went through the training, and it's about 1 million people. So, and that doesn't even include all the other thousands of other videos and things that we've done over time. This is literally just one channel. So, just in the black.
Yo, if his stock savvy matches his crypto savvy, y'all might need to get out of those positions that he had you get into with the quickness. Like, for real. And what's this talk about? Like, he's saying it like it's a bad thing that a whole bunch of people, got into the stock market in 2020. So what? Like, it's a good thing, right? Anyway, let's continue.
Black community alone, you've seen stock market participation rates jump. Well, in the broader community, 26% of all investors, I was stunned. This is a big number. 26% of all investors were investing for the first time last year during the pandemic. And then also they said that 17% of all Americans own crypto. That's a big deal too. That tells me that the 17% is probably going to grow to 25%, 30%, 35, 40, 45, 50. And here's what's going to happen. Here's why I'm really bullish on crypto right now. As this participation rate goes up and people get more involved with crypto.
Like, this dude is kind of stating the obvious. If 17% of people, or in the United States, have or are holders of crypto, then obviously the potential upside is huge. The potential upside is 100% of all, Americans, at least adults, have crypto ownership. And so, what is that? 83% market share up for grabs. So okay, that's it. But which one is it? And define what you mean by crypto. Like, I don't know what he's talking about here when he says crypto, right? I mean, if the Federal Reserve decides to issue a CBDC, which is a central bank digital currency, that might mean everybody in the United States is an owner of crypto, because that central bank digital currency will be, cryptocurrency. We could see numbers approaching 90 to 100%. And, are NFTs included in his use of the word crypto? Like, marriage licenses can start to become issued as NFTs. Car titles can start to be issued as NFTs. Hell, social security cards, might be issued as NFTs in the near future. And so that could drive, market penetration closer to 100%. And so, like, when you say crypto, like, what do you mean, man? Because, crypto could mean any number of things, right? Like, this blockchain technology is so much broader than cryptocurrency. Is it tokens that he's talking about? Is it utility tokens? Or is it, other types of tokens, financial instruments, or other types. So he's just not clear. And again, he wouldn't even think to get specific, because once again, I mean, the man, he just doesn't know what he's talking about. Anyway, let's proceed. Hey, yo, this video is starting to get a little bit long, fam. So I'm going to break it into 2 parts. I'll put the link to part 2 down in the description below. But tell me what you think. Am I being too critical? Or does Uncle Boyce not know what the hell he's talking about? Anyway, I'll see y'all next time I pull up on the block. Until then, holla.